There we go. Hello, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, February 6th, 2026. Ron Quaranta here with my dear friend David Brill. We think Josh Clayman is joining us, David. She may be on the yacht to Monaco. We're not quite sure. Before we begin, thank you, everyone who's watching us LinkedIn Live and on X. Before we begin, our usual disclaimers. Obviously, please keep in mind that nothing we're discussing is any sort of advice, investment, legal, or otherwise. And no token recommendations. David, you and I often joke about it in the virtual green room. And then really what we're talking about are our own personal opinions, not necessarily the opinions of our respective firms. David, I'm back up to about 65 or 70% brain power. If I say anything stupid on the live stream, you're allowed to call it out. But buddy, it's been a crazy, crazy week. What do you make of big drawdowns like yesterday?
Well, for one thing, it always seems like when I go away somewhere that
You can't travel.
I mean, literally the last couple of big drawdowns, I was in Nashville for, a very productive internal work conference for a few days. And obviously my focus was on what was going on with work. But, I did see alerts like keep flashing, X is down 10%, Y is down 5%, Bitcoin's down 5%, or the coin gecko ones, I think, Bitcoin's below 70, it's below 69.
Yeah.
It was almost like acting like an auctioneer. Um, what I make of it, and I think we'll have a robust discussion today about it, is
Yeah.
a lot of liquidations. There's still a lot of leverage in our markets. I think there's a lot of automated selling, and I think we can share between the two of us all the sort of, I don't want to call them conspiracy theories, but more like of all the guesses about what's going on and why it's happened. Because I don't think the on-chain data necessarily guides you to why it's happened.
Right, agreed. And I think the things we've been focusing on, first of all, let me level set for the audience, David, to show how dedicated David is. This poor guy responds to text messages from me or Josh throughout any event he's at with conversations about crypto prices. So, David, I always appreciate you, buddy. Look, I think there's a lot going on. I think the deleveraging is big and hurting. I agree with you. I think there's still a bunch of leverage out there, but I think there are macroeconomic issues. We didn't even talk about it in the virtual green room. The worst January jobs data since the great financial crisis. So you're looking at headwinds to economic growth, and we can have very complicated conversations about interest rate cuts and Fed policy. I think, I read something interesting about the 4-year cycle. And David, let me throw this out there as well. Is the Bitcoin 4-year cycle broken? Because if you remember those cycles, a lot of them will lead into sell-ins at the end of the 4th year ahead of halvings. So what are your thoughts about, is it a cyclical turn for Bitcoin, or is this just kind of a malaise through the markets?
I mean, look, people point to the 4-year cycle and it's repeated again, but it's only been a couple of 4-year cycles. I think I'd like to think the market has matured quite a bit since then, but look, it showed up a couple of times now, so we can't discount it. I do think that the scarcity, and I think we should really delve into this more, but
Yeah.
Everybody thinks of how many Bitcoin are actually, trading, and there's probably 3 or 4 million that are lost that will never be recovered, or won't be recovered until we find a way to recover them. So
Yeah.
maybe there's only 19 or 20 million trading. But with all these synthetic options, I think it creates a counterbalance that lack of scarcity because you've created all this synthetic Bitcoin. So I think that has something to do with it. And I think there are a lot of, 2x leverage folks or people who are still suffering from 1010,
Yeah.
sell-off.
David,
And
I just go ahead. I'm sorry, buddy.
no, go ahead.
I just shout out to George Tavares. He says, good to see us. It's always good to see you, George. Thank you for joining us. David, good point, but I want to be very specific here. When we say synthetic Bitcoin, we're talking about a universe of instruments now, right? We're talking about swaps. We're talking about indices. We're talking about derivatives. There's an entire ecosystem. But let me ask this question. Doesn't this generally just represent the financialization of Bitcoin as an asset class? Isn't that a good thing?
It does, but it also is a counterbalance to the scarcity that, it was created for in the first place.
Yeah.
So, look, we know that in actual Bitcoin, there's, somewhere, what, 19 or 20 million really in circulation. But with all
Yeah.
these synthetic means of creating it, you created multiples of that. So that's why I think it can move more than you would expect it to move. And I've also heard some really interesting conversations, like things I've listened to on X.
Mm.
You know, one of the things is that in the Epstein files, several of the early founders and early companies had investments from Epstein, and a few
Mm.
individuals have been named. And I'm not going to, repeat what's out there. If people want to see who they are, they can look in the files. But there's some important people in Bitcoin who had involvement with Jeffrey Epstein, and so you know, I mean, I heard somebody say this. I wish I remember who I heard it from, but like, some people don't want to be invested in like, an Epstein related coin, even though clearly it's not because it's all open source. So there
Yeah.
are these other headwinds out there as well that I think are playing a role. And then look at how volatile gold and silver has been.
Yeah. And I think it's really this confluence of macro events plus Epstein file crap, for example, and it's just been a really focused downtrend for a lot of assets. And you mentioned gold, you mentioned silver. I mean, yesterday the Dow was down 700 points. I think we're up 800 plus now. I don't have the
Yeah.
monitor in front of me. And David, I think one of the things you and I often focus on, tell me if you agree or disagree, is the broad spectrum or the long scope, the long tail perspective on a lot of this. You and I look at data. There are people out there who do much deeper dives into the data than you are, but I forgot who said it recently, and if someone can cite them for me, that'd be great. Call this the least worst bear market for BTC ever. And that says something. And one of the data points was, well, the drawdown in 2022 for BTC was over 77%. So when we hear we're down 50% from an all-time high, we're down 20% year to date, those sound like catastrophic numbers, but is it an overstatement, David, to say we've been here before?
We have been here before, but with the financialization of Bitcoin and the way
Hmm.
the assets sort of developed over the last couple of years, I think it's a little strange that we're revisiting this much volatility, considering that a lot of the IBIT holders, aren't selling. They're not trading. But I do think we have like a really robust options market, and people are speculating. And at some point, either your calls are going to be worthless or your puts are going to be worth a lot,
Yeah.
and they need to be covered. And so there's some of that too. So
Mhm.
I do think we're going to continue to see these big swings, and I'm not convinced that we've seen the bottom in the market.
Yeah.
Especially, remember last time Bitcoin sold off hard when there was, military action in Iran, and I'm
Hmm.
still of the view that we're likely to see that again. And so there's a possibility that we could sell off again if that were to happen.
Yeah. David, it also makes me think about, we talk about the broad macro issues, we talk about the geopolitical issues, and those are all important parts of the consideration. But if we look again at that broad spectrum, this is the most institutionalized, I'm just using Bitcoin as the prime example, the most institutionalized Bitcoin's ever been. Has that brought more volatility or just broader access, which looks like more volatility?
I don't think it's brought more volatility, but I think it does certainly enable more volatility if that's what people are looking for and trying to create.
Right. Going back to your comment about the different instruments where you
Yeah.
can do that.
And let's not forget overseas, people are still trading 100x. And, we still see several $100 billion of liquidations happening on a fairly regular basis. So, we still have a YOLO part of the Bitcoin
Yeah.
and crypto ecosystem. And, you know, I think what happens is, the crypto moves and somebody's like, oh, I think it's going in the opposite direction. And I'll put,
Yeah.
25, 50x on that.
Hmm.
And, obviously if it goes down or it goes against their position, they get it, exposed.
Yeah.
So I do think that financialization should have helped make these less deep, these corrections, but clearly in this case, that's not the case.
So, David, the other question that I have there as well, when we look at leverage,
Mm.
you and I look at the data, you certainly know it better than I do. I guess the question becomes, we've talked about leverage and the deleveraging that's hurt the markets at every one of these localized downswings. Why is there still so much leverage in the market then?
I mean, you saw the instruments.
I
Uh,
did.
I think there's a difference maybe. Well, also look, you have a lot of uptake in these 2 and 3x, as Amber's Amber's tired of hearing about these downs.
Tired of hearing about the drawdowns.
Um, but all joking aside, you do have these 2x and 3x instruments. So you do have some really easy access to these. And then you have the people overseas still doing, the
Yeah.
multiple X. And look at some of our exchanges, I think you get 5x now too.
Yeah.
So I think, look, there is some gambling instincts in our markets and prediction
Fair.
markets and some of the other markets. And, until people learn like 100x is not your friend, um, there's still going to be some more of that.
Yeah. David, and I'm going off script here. Do you anticipate, we've talked about it overseas. Full disclosure, you and I believe, and a lot of analysts believe, a lot of that leverage is particularly out of the Asian markets. Do you imagine that it's some large hedge funds participating in that as well? I mean, these are not leveraged positions for retail investors. Do you agree with that?
No, I think it's both. And I think some retail investors are doing leverage trading and
Hmm.
getting blown up most of the time. And I think there are some institutional that are leverage trading. But look, I mean, you really have to have a mandate to do some pretty wild things if you have a mandate for your fund to do 100x leverage.
Yeah.
Right? I mean, that's some serious, that is a serious, you know, uh, privilege or right that you would have. I think another thing is we really need to look at the DATCOs also and the
Yeah.
miners. And so I do think that the miners will defend a price point where they aren't profitable. So if Bitcoin reaches a price point where running the miners aren't profitable, they may defend that so that we don't go below that. And
Right.
then with the DATCOs, you know, at what point do they have to sell?
Yeah. I mean, David, that's a really interesting question. And one of my to-dos for the weekend was to review some of the DATCO activity. And I'd seen, like, I don't know for strategy, are they below MNAV for strategy? Like, at what point? I think I'd seen recently their loss was a paper loss of 42 billion because of the recent Bitcoin drop.
Yeah. I mean, I think some of them, well, look, for starters, if they're only holding and they're not doing anything else, they're almost like a closed-end fund.
Yeah.
And so they really should be trading a few points, a few percentage points below their NAV because they have costs
Yeah.
associated with buying all the, running a public company
Yeah.
that's holding crypto. But look, strategy had a big multiple at one point. It's come back to almost par. It was probably below. I don't know if it was below par yesterday,
Hmm.
but it's recovered some today. So I think that we just have to see if any of those DATCOs are have to sell. Like,
Yeah.
Tom Lee's DATCO is down what $8 billion. Is there
Yeah.
a point where he has to sell? It's not clear. I think he sort of has a broad mandate, but we should be aware of that because if those entities have to sell,
Hmm.
um, you know that's a lot of crypto that's going to go into the market.
So it's a really good point. I was thinking about this the other day, David. It makes me wonder about, for all of the DATCOs out there, are there activist shareholders in the wings waiting to reach out and force liquidations on some of these to return money? Like, you could imagine activist shareholders thinking those are prime targets
I mean, yes, but do you want to sell when
at the bottom.
yeah, the underlying asset is down so much?
Right.
I mean, a lot of it will go back to how were the what was the mandates? What's the prospectus say? What's the S1 say?
Yeah.
Uh, but look, I think if you're investing in those, you're investing in those that have like concentrated exposure to one crypto asset. So it's going to go up and it will go down. And right now
Yeah.
we're in that down phase. So I don't know. There are always going to be these securities litigations from these things, but
Yeah.
it really I think will have to do with the disclosures and the expectations.
David, I also wanted to talk a little bit about you and I haven't had the chance to speak for the past few days. When we talk about the markets, and I totally forgot my train of thought about where I was going here, but it'll come back to me. But you also have to come back to the regulatory and legislative landscape. I'm not sure we're going to be able to get Josh today as well. When we look at the state of play, I think you and I talked about in the virtual green room, we got a party line vote out of Ag Committee in the Senate. I think I'd seen something this morning about some senators, quote unquote, confident that they'll be able to move forward. We've been saying the longer we get into the year, the harder it will be. That's almost faded into the background with everything else, but that's still an important consideration, isn't it, David?
Yes, it is. It is an important consideration. And what's interesting to me is a lot of the core issues have been resolved. Like, I think a market structure bill that really enables all of the tokens to be part of the financial regulated ecosystem and have rules governing them. I
Mm-hmm.
think like the meat of it, I think there's agreement on it. I mean,
Yeah.
there are still some definitions that need to be worked on. I think there are still some issues in DeFi that need to be addressed. But it feels like the real meat of it is done. I think it's the relitigating of paying rewards from the Genius Act on stablecoins,
Yeah.
ethics, and AML and what additional role AML may play with DeFi is really the three issues. The real issues around characterization of tokens and how they'll trade in the financial markets seems to have been addressed. So
Yeah.
it's just interesting that some of these peripheral issues, not the DeFi one, but the other ones, are what's sort of holding it back right now.
So let's just call it for what it is, David. And I know this might be unpopular for me to talk about, but there's a political angle to it. There's a politics angle of it. And in my mind, that seems to be the biggest roadblock for movement out of the, you know, out of committee and into full voting. I guess the question becomes in this environment, I don't think that gets resolved.
That part of it is probably the most intractable part. I
Yeah.
would say that part and payments or rewards on stable coins are the two biggest
Yeah.
challenges that we face.
Yeah.
But I do think it's important when you think about altcoins that if we don't see market structure, do we get rulemaking to address how to treat them? And that will
Hmm.
take a lot of time because you're going to have draft rules and you have comment periods.
Yeah.
Does that mean that banks and other regulated institutions aren't going to enable trading for altcoins? Uh,
Mm.
does that mean it's just sort of Bitcoin and Ethereum and maybe one or two others? So I think that's an issue that hasn't been talked about too much, but something we do need to be mindful of.
And to that point, David, we saw recent news conversations about SEC and CFTC's Project Crypto. Is that all of the work the CFTC and the SEC are doing? Is that really to mitigate what's happening with regards to market structure?
I mean, I think so, and I think also it's sort of what I imagine is there's a thoughtfulness around what are the rules going to look like if we get a market structure bill done and getting ahead of that and
Right.
starting to think about it and draft and ideally that's what's also going on in a separate lane.
Yeah.
um, one positive thing is that the markets just could become so big that if we don't get market structure and it takes some years for rules to be drafted, that maybe that just gets too big that they can't put the genie back in the bottle for some of the other instruments that are trading.
Yeah.
But I think it's our overwhelming preference that we get something done. But it has to be something that works too.
Yeah. David, in the midst of my dealing with the influenza virus over the past few days, I did spend a lot of time obviously looking at the news. One of the things that struck me is the inevitable sort of negative market pundits who suddenly pop up all over again when the crypto markets are down broadly. You and I've seen them in the news, and then the kind of fear mongering around quantum's going to destroy Bitcoin anyway. I've heard more than a couple of colleagues say, I told you Bitcoin was worthless. And they've been saying that, since it was below 10,000. David, are you surprised by some of the naysayers still out there, given the financialization, given how Wall Street's been involved, how banks have been involved? how do they still have a leg to stand on? I'm sorry, I'm digressing a little bit, but it's shocking to me.
Well, I think you have to split it in two. And
Mm,
for one thing, haters are going to hate, and I think X is an excellent platform. But you're going to get divergent views on it, and you're
mhm,
going to get people who are you know bull posting, and you have people who are bear posting. So I think that's not going to stop. I think there's an agreement that the technology that underlines crypto is valuable and it's being used in different ways. So I don't think you're seeing a lot of messaging around that part of it. So I think really what it comes down to is, you're going to have people who hate crypto. They're just not going to get it. They don't want to get it.
mm,
And they just don't see the value of it. And then you're going to have people who do see the value of it. And so, but I do think, again, we do have a challenge, one with Bitcoin and sort of it's a store of value, but what are the use cases for using it?
mhm.
I think that's one challenge. I think with other cryptos, um, I mean, the altcoins, really, all the altcoins, or the majority of them, are better as entities and as technology than they were 2 or 3 years ago because they've been building.
Yeah.
But I still think there's the leap from having them to getting them to be used in a daily way, and sort of incorporated into our economy, or using the app, using a specific altcoins app to do something, and we still need to catch up on that.
David, that brings us to something you and I and Josh have spoken about for years, and I think you're alluding to this, which is what's the UX for some of that wide scale adoption, correct?
Yeah, I mean, it's more. I mean, obviously, UI UX is still an issue.
Yeah.
Um, people are going to still be afraid, like if they forget their seed phrase or a password, that they can't access their. That's still a problem. I just think that, yeah, I don't. We still haven't been fully integrated, and I've said this on our podcast before, but in some ways, I do worry that stable coins are sort of eating the rest of crypto's lunch a little bit in utility. Um, and I don't think this ecosystem was just designed to create a digital dollar. So,
Agreed. I mean, so David, then let's solutionize a little bit. If you and I had the big whiteboard and a couple of pots of coffee going, one of my hypotheses is that the catalyst for that kind of wide stream user adoption will actually be artificial intelligence. And I think that convergence is coming soon.
yeah.
Do you agree with that? And I think you and I could talk about, we're digressing a bit, but some of the models that might make sense for.
No, I do agree. I mean, I think they are using already some sort of form of barter or trading to do
Hmm.
things. Or I think Malto has people as robots, and I think there was some ad I saw on X about you know the robots looking for a CEO for their company or something. I don't know if it was just a fake or not. But again, the question is, Ron, are they going to use different token platforms, or are they going to use stablecoins?
Hmm.
Um, and I'm not knocking stablecoins in any means. Like I like the use case and support it.
Hmm.
But for supporting the rest of the ecosystem, we need to start getting that implemented and part of people's daily lives.
So that makes me think about something that you and I have spoken about, and so many others in our industry have spoken about for a long time. And I'm going pre-crypto, David, in many ways. In my mind, it really comes down to, are we talking about open, decentralized, or some levels of decentralization? Or are we talking about 1,000 different walled gardens that we call stablecoins for different entities? And I would argue there's got to be a balance between the two. Tell me if you disagree, but I think you do agree. We can't live in a world of only stablecoins.
I mean, I don't want us to live in a world of only stable coins, but
Fair.
we've gotta come up with use cases that people are using. And I'm intentionally not picking any tokens because
Yeah,
I
of
don't want to
course.
pick one out one way or the other. But like we need to come up with a use case where people are going to use these tokens on a regular basis. And it may be that they use them and not realize that they're using them necessarily. Like
Right.
they know that they're using different tokens, but they're not sort of seeing it in the UX UI, but it's done in the background. But you know, I think that's really important. And so that's something that we really as an industry have to work on.
Yeah. I mean, when your Optimus Prime humanoid robot, David, starts paying for things for you, they'll probably do it in other types of crypto, not just in stablecoin dollars.
Yeah. And look, I think I mean, I love technology, and I just think we're on the precipice of some amazing things.
Hmm.
So I want to make sure, or I want us to see that the crypto ecosystem is part of these developments. And I think stablecoins are an important part of that ecosystem, but I also want to see other token projects get involved and be part of that as well.
Yeah, David, that's an interesting point. We've talked about this as well. And I think you and I and so many of our colleagues do see this, but I think it gets lost in the popular media narratives. Crypto is part of an innovation wave across an entire spectrum of different capabilities. And a lot of the argument is, well, apparently the only use case for Bitcoin or crypto is financial markets. I think that's a bit myopic, to be perfectly honest with you. I think we're looking at innovation changes across how we do what we do, how we exchange information, how we exchange value. And we joke about robotics and we joke about AI, but the truth of the matter is those are all part and parcel of this big innovation wave. And I think we'll see some of those bumps, but at the end, when true use cases are found, they'll be unleashing trillions of dollars of activity.
Yeah, I agree. I guess another question I've heard from people is they've said to me, well, can AI as it evolves just do all these things and sort of
Mm,
cannibalize all the technology? And right now I'm of the view that that's not the case, because while it can do certain functions, you actually need things need to be monitored. Like, it could do the background, but somebody's got to create the front end. Right now it can't really
yeah,
do the front end things.
right.
Or it can do the analysis, it can analyze things, but it can't really, put them into business practice per se. Or
Yeah.
they've been talking about that on Bloomberg this week, that you know AI can replicate different technologies, but they can't replicate like the human part of it, and that part of it needing to be there. But so I just think it's something we need to be mindful of as we kind of continue to grow and expand. That we need to be mindful that we need to bring these use cases out. And then
Yep.
the last thing hopefully I'm not rambling on, is,
No, no, no.
for valuing altcoins, I think we do need a way to know that, like, whatever is outstanding is going to be outstanding for a while. There has to be some more discipline around that, because if you can just have random token unlocks that aren't contracted for and
Mm,
just add supply, then it's so hard to value some of these token projects.
yeah. No, David, really good point. I mean, what I say to colleagues and friends who ask, and again, nothing is investment advice, is if you believe in a thesis, hold fast and don't panic, and do
Yeah.
not engage in 100x leverage unless that's your business, and even then, don't do it. David, I want to pause for a brief second for everyone in the audience. Thank you so much for joining us. Josh has ditched us for the shores of Monaco, I believe. We'll try to follow up with her at a later date. If you've got comments or questions for David, put us in chat. We're happy to address them, or if we miss it, info@wsba.co. David, we've only got a few minutes. Let's talk about some of the economic issues that we haven't had the opportunity to talk about a little bit. Um, we're getting data. We saw data for January jobs down 108,000 jobs. It's the worst January for jobs data for payrolls since the great financial crisis, I believe. We're talking January of 2009. And it brings us back to risk on, risk off, and the state of interest rates at play. I want to avoid the politics of that, David, but what are your thoughts on what interest rates look like, rather, for the balance of 2026?
Oof.
Got to put that prognosticator's hat on.
Boy, that's a heavy question on a Friday afternoon. Look,
Yeah.
I think that we have to understand that with AI and automation, that a lot of, you know, I'm trying to think of the right word, but there's a lot more being done. There's a lot more utility being created by companies that don't need to hire additional people to have that productivity.
Yeah.
So I think there's also some of that at play. And I think finally, like, as we see deleveraging in the market, I think there's been probably a bit of deleveraging in human capital from companies
Mm.
that had overhired during COVID and held on to people, but now at some point, um,
Oh, it looks like we lost David. We're going to give it a minute or two. I think we just got David back. Let's find out.
Okay.
David, they don't want to see just me. We got to keep you on screen, buddy.
But I think there's over last year there was sort of some delevering of people,
Yeah.
from potential overhiring, or like I think Amazon said they've just seen so much productivity gains that they just felt like they needed less people.
Yeah.
So I think there's some of that involved. I think we need to let it play out a little more. I do think that, in certain areas there is a lot of hiring. And
Mhm.
also the other thing is, I think many of us agree that we probably had a bloated government workforce. So there's probably a lot less hiring in the government right now, and that's also being reflected.
Yep. And David, for those people watching or colleagues who raised this to me, I don't want to minimize the human toll on
No,
some of these
no.
changes at all. I mean, indeed, some people are losing roles because of productivity gains with AI, and it is one of those things that reminds me in some ways. Everyone uses the internet revolution, the 1990s or so, early 90s, how it disrupted job markets, and I think that's a real thing, and there's turmoil there. The outcome ends up being a much more efficient marketplace, but that doesn't mean there's not opportunity there, and I think it'd be important for people to remember that.
Yeah, and look, I think there's still a lot of utility and experienced people who have, done something for a long period of time, and AI is not gonna really replace
Yeah.
judgment and experience. And I totally agree, like, totally, like, these things are very personal, and these, people losing their jobs is very important, like, on a personal level to be mindful of. I just think, on especially on the lower level jobs or sort of the incoming out of college level jobs,
Yeah.
um, I think I think younger people will really need to be AI proficient coming into these roles because a lot of the things that they may have done the first couple of years are going to be automated.
David, I'm going to go totally off script on this. I don't
Okay.
have a college age child, but you do. And I'm curious, like, does the education system, are there AI courses embedded now in education as requirements, or how does that work?
I don't think there's requirements, but I've certainly encouraged my daughter to look at different opportunities, to take AI classes and,
Hmm.
to learn how to prompt and things like that. And I think that's going to become the norm, and hopefully it'll become the norm in high school
Yeah.
and then in college. And look, I think it takes time to catch up. I think a lot of schools don't have classes on cybersecurity. I expect that to catch up too.
Yeah.
So I think we have to give them time. But
Mm.
I do think those are going to be like not nice to have, but needs to have for people like going into the white collar workforce.
Yeah. David, I'm old enough to remember when computer classes were in basic and they were voluntary. I can't imagine someone not knowing how to use a computer today. So, look, these are seismic changes for our world. I want to point out for the audience, David, one thing you very adeptly avoided the question I put forward earlier, which is, will we see addition? Very smart. I get it, David. I see where you're coming from. But we saw a pause on interest rate cuts from the Fed. I think it was right before the jobs data for January. Correct me, someone, if I'm wrong. David, we're not going to make any prognostications about it, but given the economy and what you and I have seen with jobs data, do you anticipate interest rate cuts later in the year?
So that's my savvy media training, Ron. I gave
I was
you
going to
really
say,
coherent
well
answers
done.
and I dodged the question. So that media training is doing some good. Um, I think it's going to depend on what's more important. Like, is
Mm,
inflation being closer to 2% more
yeah.
important? Although I think we think it should be, 3% maybe should be the baseline, or, does the jobs picture lead to lower interest rates? I
Yeah.
still think we're going to see lower interest rates this year, but they also may be happening while inflation is near 3%. So
Yeah.
you really have that balance. I mean, what do you think, Ron?
I agree with you. It just makes me, you and I joke often about, we don't even joke about it, like the broad sweep of time, the bigger picture. People are arguing about 2% inflation, and you and I think, are of like mind that, 3% is probably the right terminal rate, give or take. Historically, those are such low inflation rates.
Yeah.
compared to, call it 50, 60, 70, 80 years. Like, if people understood how low that is, relatively speaking, they might appreciate the perspective of 3% being okay for economic growth. So I'm with you, David. A lot of it will be data dependent. I wish there was less politics involved in things like monetary policy. We can talk about that at the next happy hour. But David, we're just about out of time. I'm just about out of voice. For everyone who's in the audience, thank you so much for joining us. If you have additional questions for David or I, drop us a note, info@WSBA.co. David, always good to see you, and Amber, buddy. Hoping we do it again next week. We'll have Josh as well. Let's leave it there, everyone. Have a great rest of the weekend.
Take care, everybody.
Bye-bye.